Hello and welcome to Business Today Television. I'm Siddharth Zarabi, and joining me now is Venkatraman Narayanan, the Managing Director and CFO of Happiest Minds Technologies. Welcome to the show, Venkat. A good set of numbers that you have shown. What are the key financial indicators that you would like to share with our audience at the start of this conversation?
Good morning, Siddharth, and thanks for having us on the show. Uh, if you look at our numbers, we have really posted decent, I would say, better than what the industry has shown in terms of revenue growth, profitability, including what we are seeing as possibilities for the year ahead or the quarters ahead. Revenue has grown, total income has grown about 4.7% QOQ. Operating income in dollars has grown about 3.6% and about 13 plus percent year over year. So all of this indicates the strength that we have in our internal systems to get the revenues from our customers and continue the growth path that we have set for ourselves. Coming to the bottom line, we have been talking about a guidance of 22 to 24% on EBITDA. 13th quarter in a trot, we have beaten that guidance and we have beaten 25%. So we have closed this quarter with 25.5%, Siddharth. So all round, good performance. First quarter where we crossed 100 crores of free cash flows, 100 crores of EBITDA, including EBITDA. We've crossed 5,000 people, happiest minds as we call them. So the family has become 5,000 people. We are now looking to see how to engage more and expand through acquisitions.
Okay, that's a good point. Before I come to the acquisition part, just a quick note. I'm sure shareholders, investors would like to know how long do you think and how optimistic are you really about maintaining the 25% odd margins going forward?
If you look at my guidance, I've always guided between 22 to 24%, So we have taken into account some of the inherent risks in the business, which is, some bit of seasonality, cyclical nature of business within the 4 quarters of the year, because you have typical Q2 for the IT industry has got a lot of cost increases in terms of wage increases. That happens. And then there is always the risk of foreign currency. That happens because 72% of my business comes from overseas. And to overlay all of this, there is this talk and fear of whether there will be a pushback from customers on rates and rate reduction. So these are all things that we keep on the top of our mind when I do my forecasting. With that is what we have come up with, this number of 22 to 24%. And we are quite confident of retaining that number for at least some time, medium term at least.
Okay, medium term. What would be the medium term outlook description? Would you call it uncertain, or would you say that some of the worst uncertainty and fears are behind us now, and the industry will have to wait it out for maybe till the end of the current calendar year?
So here I would go with option two, because we were all waiting for that so-called recession to happen in the US, which obviously doesn't seem to be happening. And my guess is as good as yours or any other economist is what I would like to say. But as an industry, we are all looking for a better second half. That's one. And within the industry, there are pockets where growth is happening. So the companies like ourselves, we are growing, maybe not at a blistering pace, but on a comparative basis, growing 3.7% on a sequential basis and continuing to aspire for the 25% growth through organic and inorganic means does set us apart. But how long will that happen is the question that most of the people have. But largely, I think the second half should look better. And for sure, next year, obviously, it has to be. Because whenever there is a turnaround in the so-called economy, the IT industry has been the first to come out of it. And they come out rather strong. You saw it pre-COVID, post-COVID. You saw it after the banking and financial crisis. And even before that, Y2K. And there are many instances where we have proved this multiple and many times over.
Absolutely. And briefly on a macro basis, you are absolutely right about the recession that hopefully will never happen. but there's another event that some people had foreseen, but a vast majority never imagined, which is deflation in China, the world's manufacturing powerhouse. But we'll leave that for later. What I want to understand is where will this growth come from? What kind of specific verticals? And if you could also provide a geographical outlook for the growth estimates that you are pointing towards.
About 72% of our business comes from the US, 15 and a half from India. Europe is about 9%, and the rest comes from the rest of the world. Rest of the world includes Middle East, Australia, which is showing decent and good traction. India, it's a good bright spot, brown spot, whichever way you want to call it, in the global economic landscape right now. So that's doing pretty well for us. And I should also say that the business that we do in India is not at suboptimal rates, as many people would call it. We do it at really competitive prices, and people really want good services. That's what we are seeing. And obviously the US, which calls out 72% for me. Obviously, growth has to come from there, and we are seeing that growth happening within the verticals of our choice. With respect to verticals, Edutech continues to do well. From this quarter onwards, we have started calling out healthcare as a separate segment, and as you will see, that's about 12.5%. So there is distinct growth happening there. Media and entertainment, where we work with certain large US corporations, is doing well, but obviously there is a little bit of wait, think, and do the next kind of an approach there. The retail CPG vertical is also in such a mode where they are saying let's hold on for a while, but we are seeing growth and in fact new signups happening in that vertical. So if you look at it, all verticals doing reasonably well, but within the verticals of our choice, it's edutech, healthcare, and manufacturing are the three which are doing particularly well for us.
How does the deal pipeline look like?
Deal pipeline is looking good. In fact, 17 new logos is what we signed up last quarter, 18 logos this quarter. So total takes it up to 35%. And if you look at how these logos are performing, they are adding to the revenue that we are accruing right now. A good metric for you to figure that out is the repeat business. Repeat business typically tends to be about 91-92% for us. This quarter, we have shown repeat business at 86%, which means the 14% is coming from the new and the new logos that we have signed up. Two of the logos that we have signed up are billion-dollar corporations. So today we have got 55 plus 2, $57 billion corporations in our roster of customers. And these are the customers who will help us, address the growth aspirations that we have.
Okay. You spoke about the edutech sector, and you have a fairly decent exposure to that. Around 23% of revenues come from that. What is the outlook for the edutech sector? Because there is some commentary that it's likely to be impacted by generative AI, and there might also be a slowdown that some companies are facing, at least in the Indian market.
So there are two things. One is almost all of our business on the edutech segment comes from the US. We count about one large customer in India. And this is also not one of the new age edutech companies that I would like to. It's a very old educational institution with whom we are working very closely on building a platform for them. So one is the fear of comparing it with what's happening in the Indian edutech segment. I would like to defray that. The second part is coming to the generative AI. We are seeing that as an opportunity, in fact, because when you have a new technology like this coming out, you typically tend to have use cases, POCs, and then you need to look for customers. Thankfully, we have got this segment, Edutech, which is taking it on their chin, and they are wanting to embrace this technology ahead of time. So to that extent, it gives us that much, runway to sell into them with this new age technology. Now, generative AI and ChatGPT, these are things which we are investing in heavily. We are setting up, we have got a division which is being set up. We are training 100 people. setting up a team of core team which will take this into existing customers and new customers. And there is a lot of investment in terms of time and effort that will go into setting this up. And when you do that, you need to have use cases and customer case studies. And what better place to start other than Edutech?
What is the demand outlook for high-end product engineering work? And again, you derive significant amount of revenues from that particular segment.
About 50% of our business comes from product engineering, and we are seeing good demand in that segment, Siddharth. So there is, I would not say no concern, but I would say that's not having growth is not the concern there. So we are seeing quite a bit of signups. In fact, almost all the 50% of the signups that we saw, 17 plus 18, are within the PES segment. In fact, most of the people want to go SaaS. They want to get into platformization of their business, get into non-linear business models, customer outreach models, and all of that finally finds itself into the platform engineering type of business.
Okay, I want to turn to the point about acquisitions that you said right up front. And what is the plan there? Again, commentary suggests that you have you're looking to acquire 3 to 4 companies in the digital space and kind of just add it up with the $1 billion target that you have. So, what's the strategy going to be there, and what specific actions?
So, $1 billion aspiration target to reach that number by 2031. That requires us to do a CAGR growth of about 25%. And our this year's for guidance on revenue growth was also 25%. If you step back, the 25% number growth that we had given for this year is both organic and inorganic put together. So inorganic has a very key role to play in your growth model as well. Now, coming to acquisitions, we would like to do the 3 acquisitions, but these are all binary in nature. We have got a good pipeline of companies that we are already in discussion with. We would have wanted to close at least 1 or 2 of them earlier than later. But with the way things have progressed, because this is not just about valuations, it's about you need to structure, you need to align their business, you need to get agreement from the people on the other side, because it's finally a people to people, it's a people business at the end of the day. And there is a huge amount of work that needs to be done on alignment, whether it is culture. You can't change culture, but you at least need to make sure that you don't step on each other's feet. You need to give them space and all of that. So those are the things which are taking a little bit of time to, sort out along with the valuations. And we hope to do at least 1 or 2 during the course of this year.
I could obviously not the names, but could you hint towards the nature of the companies that you are targeting at looking at? Apples, oranges, or strawberries?
Oh, yeah. We are looking at 100% digital company because we are about 96% digital. So the best place would be to, look at adding to capabilities and competencies with companies who are 100% digital. The size of the companies that we are having in our pipeline or in our long list range from 10 million to 45 million plus. Profitable companies, because I don't think we would want to buy into a company or partner with a company and then get into turnaround, because that will be too much of effort. So we are looking for profitable companies which will take us into certain verticals of our choice, strengthens key verticals like healthcare. The last acquisition that we did in December strengthened our capabilities significantly in healthcare segment. Also took us to tier 2 market like Madurai and Coimbatore. So these are the aspects that we look for. Digital companies which are into product engineering, or they can help us add, capabilities into certain competencies or verticals.
Is this where you will deploy partly or fully the recent cash raise? What's the plan for the money that you raised?
So we today have cash resources or cash balance of about 1,200 crores, and we are adding to that every year through our own cash generation, close to 200 crores. The QIP that we raised, that's what you are referring to, was about 500 crores. And that was partly to fund our organic and inorganic growth needs. So fungible cash, we'll have to replace one with another and make sure that we meet our capital structure appropriately. But like you rightly said, a large part of that will go to funding our strategic initiatives.
Yeah, so despite all the push towards digital, and digital is great, cashless payments, cashless economy, cash on the balance sheet of a company is always the best. Cash is king when it comes to balance sheets, and investors are always very happy to note that. Of course, in certain cases, some investors would like for more aggressive utilization of the cash and not just treasury income. One last question, and this is something that I've been asking practically in every quarterly earnings review with IT companies. And this is the talent mix. A lot of engineers coming out of our institutes every year. There's been a bit of a hit due to the downturn in the startup space. To a young boy or a girl looking for a career in a company like yours, what would you say? What kind of skill sets are you out there looking for to hire youngsters from?
I would start with attitude, Siddharth. So that's what really matters, because learnability and attitude is what really differentiates you. If you look at it, if you say what skill somebody comes up with, you would typically only look for computer science, right? But if you look at the hiring pattern, we look at people who come from other streams, just not computer science, and who show high learnability index, who score high on the learnability index, flexible, understand business. Because today, every technology person requires to understand business, then deploy technology on top of it. So the business analyst role that everybody gets to play will really make the difference. So understand business, come with an understanding of the business or thirst to understand business, and then apply technology. That's a skill I would say everybody should come up with,
And the
including
latest
attitude.
and the latest buzzword around AI and LLMs. What would you say to job aspirants who are looking at such buzzwords?
Pick up the skill. So earlier it used to be analytics, and it was automation, it was blockchain. So these are things that you need to pick up as you go. So many a time, this is my personal remark, you have to unlearn quite a bit of what you learned in college before you can get onto the work. So there are fancy words like on the job training, finishing schools, but all of that point towards that ability to learn and absorb new technology and how to apply that to business circumstances. That's what it's all about, Siddharth. So attitude, learnability, and the ability to apply the new skill that you learn to business and business context. Put a business context around it, and I think you have a winner.
And if I add one more word to that, and I'll say all the attributes that you have outlined here equal to a happy mind working in a happy, successful, profitable company. Venkat, thank you very much for your time with us today. I enjoyed this conversation and hope you did too. Viewers, that was Happiest Minds Technologies taking us through their quarterly review and obviously some forecasts as well. Thank you very much for viewing. We will be back with more. Till then, goodbye.
If you like the video, do like, comment, share and subscribe.